At 400 million or over 400 million, I should say, active customers, PayPal is only a fraction of the size of Visa, which has over 4 billion Visa cards outstanding. But PayPal benefits from similar positive virtuous cycle benefits that Visa benefits from and is growing nicely in that category, which I feel is the most important category for PayPal's growth. Nevertheless, investors are interested in the bigger picture with PayPal, and some of my members were asking me for a PayPal update. So that's what I'll do here and let you know if I still think PayPal stock is a buy or if I'm changing that recommendation based on the most recent developments at PayPal. I'll share with you my discounted cash flow valuation model and look at valuation on a forward price to earnings basis. We'll also look at the company's revenue growth history, its cash flow from operations, and returns on invested capital. I'll bring that all together to answer the question if I think PayPal is a buy, hold, or sell.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So looking at PayPal's revenue history over the last decade, one thing jumps out at me, and that's the decelerating revenue growth since 2020. The revenue growth peaked at over 24% in 2020, 2021, and since then it's been decelerating, and most recently at 4.24%. The incoming CEO, it's been on the job, the CEO has been on the job for about a year now. The strategy has been for more profitable growth, although the CEO acknowledged the need for more spending on growth. In other words, more advertising, more marketing to accelerate growth. He noticed that it's decelerating a little bit too much for his liking, although in that one critical category I highlighted, monthly active user growth, that category is growing. So I wouldn't be surprised if that trend continues, if PayPal's revenue growth rate turns around and re-accelerates. Now, I don't expect PayPal to return to its days of double-digit revenue growth anytime soon. I don't know if ever, but I think as a PayPal stock investor, you should be happy with the company generating revenue growth over 6% in or above the mid single digit range. So if PayPal can generate revenue growth of 8% annually consistently, given that the company's cash flow from operations to sales metrics are so solid, I think that will generate solid returns for shareholders in the long run. So speaking about its cash flow from operations to sales, that's been improving. As I mentioned, the strategy has been working in focusing on more profitable growth. PayPal's been going after customers it can serve more effectively, higher value customers rather than just going after total customers, which is a strategy that I always prefer. And I give this example. If you're a restaurant in a city and the customers in that city or the people in that city are your potentially highest value customers because you can earn their business more easily than you can earn the business of somebody who's just outside of the city or maybe 20 minutes outside of the city. If you're going to try to win that customer that's 20 minutes outside of your city, you've got to deliver such exceptional service to make that customer come back to your establishment, driving so far to come to your restaurant. Whereas if you're serving the local residents of your city, you don't have to deliver as good a service in order to earn their business because you're so much more convenient. And that's what I mean when I talk about going after more profitable customers. Customers you can serve more effectively. Don't just go after every single customer that is out there. That makes for unprofitable strategy, wasteful advertising, wasteful marketing in an effort that's not likely to succeed. Where if you focus on your core customers, that effort is more likely to succeed and you can generate more profitable returns in the long run. So I've liked this strategy and it's so far paying off for PayPal. While revenue growth has not yet re-accelerated, the cash flow from operations to sales number has turned around and moved upward from levels of around 13% Now it's up to 23%. Similarly, its returns on investor capital have also improved. It hit lows of around 7% in 2023, and that's rebounded all the way up to 13.65%. If they continue on this trend, I wouldn't be surprised if the returns on investor capital improve over 16 and approach to 20% because PayPal operates a very asset-light business model. It just brings together people making a transaction, and it needs to develop the technology behind that, the infrastructure behind that, but it doesn't require much investor capital to build that network. And if you look at the potential for PayPal, you can look to Visa and how successful Visa has become. If PayPal can be just a fraction of Visa, it will deliver very strong returns for shareholders. As I mentioned, PayPal at 400 million active customers. Visa has over 4 billion Visa cards outstanding. Now, that's not an apples to apples comparison, but it just gives you a picture of how much bigger Visa is compared to PayPal. So if PayPal can even reach a quarter of the size of Visa, maybe half of the size of Visa at best, at its most highest potential, that will deliver remarkable returns for PayPal. But at this level, it's about 10% the size of Visa, and it's already delivering solid profits. So if it just increases to 15% the size or 20% the size of Visa, that will generate strong returns for investor capital and subsequently strong returns on the share price. So let's look at valuation now. And when I did my discounted cash flow model for PayPal stock, I got an intrinsic value per share of $122 compared to the current market price of $69.46. So according to my DCF model, PayPal stock looks undervalued still. And by the way, if you want access to members only exclusive videos where I do discounted cash flow valuation models for many companies, you could join my channel and I've got a lot of videos on that regard. And then when I looked at PayPal's valuation on a forward price to earnings basis, it also looks cheap at a forward PE of 12.34. So whether I look at the forward PE or my discounted cash flow, PayPal stock looks cheap. So to answer the question I posed in the headline, is PayPal stock still a buy? I think so. I have the stock rated as a buy and I updated that recommendation today, March 17th. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.